Hey, welcome everybody back to another awesome episode of Proof of Vision. Fantastic conversation for you again today. We had on Huff, the founder of Pear Protocol. Um, if you're a trader, specifically if you're a pair trader, this episode is definitely for you. Huff really got into the benefits of pair trading, especially in the current market conditions. I think it's very, very hard for people to try to figure out how to make some profits in the kind of shitty market conditions that we've had. And pair trading might actually be that outlet for a lot of people. Obviously, you have to get educated about it. That's why we're here. So definitely check out the episode. Uh, there's a lot of content that we've actually published on Pair Protocol as well. So check out Alia Research for those needs. And yeah, we hope you enjoyed the episode. If you do, please consider liking and subscribing. All right, take care. All right, welcome everybody back to another episode of Proof of Vision. Really, really excited today to have Huff. He's the founder of Pear Protocol with us. How are we doing, sir?
I'm very well. How are you, sir?
Doing great, doing great. Markets are crushing me as usual, but nothing new there. How are your bags doing?
They're okay. I hold very little spot, so that is a good thing other than Bitcoin. And actively trading this market has been really tough since February and March. Thankfully, most of what I've been doing has been pair trading, which I'm sure we'll talk a lot about, and I'm sure now is a great time to talk about that because my outlook is that we're going to be in like prolonged kind of downside or chop for a little while.
Yeah, yeah, I'm seeing a lot of people share that same sentiment. But I guess before we get into all that, let's talk about your background a little bit, Huff. Like, how did you get into crypto? What were you doing before this? Talk about your origin story a little bit, and then what inspired you to create Pair Protocol for the
Yeah,
market.
for sure, happily, and thank you for hosting us. It's glad to be here. So I worked for an investment bank for the bulk of my career. So the first 10 years of my career, I was on the trading floor. And in particular, I was trading something called equity derivatives, which are basically, you can imagine, like simple options and more complex options on equity indices, like the S&P and the Euro stocks and stuff like that. And that was really great grounding to learn about financial markets, in particular to learn about macroeconomics, to learn about trading, to learn about risk management, and to understand a little bit more about just the wider world. I then became a little bit disenfranchised with what we call TradFi. It was getting heavily regulated, lots of compliance. The quality of the people that were there was starting to like drift lower. And I was always interested in alternative money systems. So I was really like a bit of a gold bug at one point. And especially after like 2008, 2009, buying physical gold and having it in my house. So I was always interested in alternative assets. And I purchased Bitcoin during my time in banking. And so Bitcoin was the gateway drug. So fast forward, I've quit my job after 10 years of banking, been somewhat interested in alternative assets. And then DeFi summer happened. And for me, DeFi summer was this massive kind of big bang moment because I realized actually there's the potential here to be your own bank. And so if you think back to Aave and Compound and what they were doing way back then, I was a big believer and still am a big believer that a lot of finance can be moved on chain. And so that's what got me into crypto. Ultimately, I ended up managing money on chain. So doing a little bit of active yield management for other people. Did that for a few years. So you could say I was running a crypto hedge fund of sorts. And then after what had been like 2-3 years of managing money, having been a professional trader in the past as well, I really got the itch to build something. And so when I looked back on my career in crypto, I was making money doing two things. Number one was selling vol, which lots of people are familiar with, selling call options on Bitcoin. And the other thing we were doing was pair trading. And the pair trading piece was really interesting to us because there was nowhere to really do it efficiently. I had to manually go to DYDX and open a long position on ETH, a short position on Ethereum Classic, go on to Excel and manually calculate my P&L, go on to TradingView and look at the charts, go on to another spreadsheet and keep on top of my net funding situation and things like this. And so that was really the genesis of PEAR Protocol. And so that was now 2.5 years ago. We raised some money, and alas, we're here now. So that's my somewhat long-winded explanation of how I got into all of this.
Well, first question that comes to mind is, do you still have your physical gold at your house? I got to know that. I mean, are you still holding gold bars under your mattress, or what's the status there?
I wish I did. If you look at the price of gold, it's been an incredible real-world asset to own. I don't, unfortunately. I pivoted to what has been a better return, which was just buying as much physical Bitcoin as I could. And that is all in cold storage, not even in my house.
Yeah, there you go. There you go. Well, I was just gonna say, like, if Elon and Trump, they go audit Fort Knox, and it turns out they have no gold, we're definitely gonna point them over to Huff's house to figure out where it went.
God. If only that was true, my friend.
Right, right. I want to start off, I guess, talking about pair trading as a strategy, just in general. Like, walk me through it like I'm five. What is pair trading? Why do you think that it's such a powerful strategy for traders to employ? Talk about that a little bit, and then we'll talk about the protocol.
Amazing, yeah. So pair trading is really commonplace in equities. So in the equity world, people will be familiar with the concept like longing a stock, so longing Apple shares or something. And they'll broadly be comfortable with the idea of shorting something, so shorting Apple stock if you think it's going to go down. And there's a strategy which has been around for like the best part of 40, 50 years, largely done by hedge funds in America. But it's where you long one asset and you short another at the same time. And the reason why you would do that is because you think the first asset is going to outperform the other asset, even if the market goes up, down, or sideways. And so, by extension, choosing Apple as an example, you could go long Apple and short Meta, right? Now, if the Nasdaq goes up, you just hope that Apple outperforms Meta on the way up. If the market moves sideways, you just hope that Apple moves 1% and Meta moves 0.8%. And if the market goes down, you hope that Apple's down 5% and Meta's down 8%. You make the difference. And so pair trading, in essence, is just longing one asset and shorting another. As it pertains to crypto, that the classic example is ETH BTC. But there's a myriad of other trades. And those trades really give you an insight into who and what are the dominant narratives. So ETH Sol had been a big one, Sol ETH rather, the inverse of that. Long hype, short BNB. These kind of pair trades really are an efficient way to capture a narrative whilst removing a lot of the market risk when markets go up, down, and sideways.
Yeah, it's really interesting, at least for me, right? Because number one, I'm a terrible trader, but being able to make more of like a specific, like concentrated bet, I think is appealing. Where you can actively bet on like the performance of the token that you like. Versus just another token, maybe that you're a little bit, bearish on, or maybe you're a little bit less bullish on. Definitely becomes extremely interesting. So I'm assuming, with Pair Protocol, then, I think you talked about it at the beginning, but, talk about some of the friction points for like how you would go about executing a pair trade prior to Pair Protocol kind of coming in and solving for some of these things.
Yeah, I know it all too well. So when we were managing money for other people, we were doing a lot of pair trading. And let's say I found a narrative, right? So the FTX collapse is happening. I know I want to short Sol, but Sol can have these random 10% spikes. The market can go up 10%, right? It's tough to be outright short. And so we picked another asset to go long against it. At the time, we picked Atom as an alternative layer one that could hoover up some of that mind share. And so to do that trade, which is long Atom and short Sol, what we had to do was go to a platform like DYDX, have enough margin, obviously, go to Atom and long that asset there. I then had to go to Solana and short that asset. So immediately there's like 4 buttons that I've had to click, right? It's very kind of inefficient. And a time gap that's taken place between like when I've longed and when I've shorted the other asset. I've then gone to TradingView and charted Atom Sol, and I'm keeping a view on where that is. And that in itself is a little bit problematic. And then you've got these like, let's say I've gone 500k long of Atom and 500k short of Sol. I'm then working out manually what my P&L is, right? So if my long is making losing only 2k and my short is making 10k, then I'm making 8. So I'd go somewhere else and manually calculate what my P&L is, and if I need to rebalance that trade. And so at Pear, we're really taking out a lot of those friction points, principally charting. We're taking out the pain point with regards to entering with one click. And the biggest unlock which we've done recently is if you think about a pair like Atom Sol, let's say it's trading just hypothetically at 100 as a spread. I want to take profit when it's at 110. Well, I have to constantly be eyeballing when it's at 110 because I don't know exactly which path it's going to take to get to 110, right? The Atom Sol as a spread. It could be the case that Atom goes up and Sol goes up and it hits 110. It could be the case that Atom goes up, Sol goes down. It could be the case that both assets go down. And so unlike a directional long or short where I know where I want to place my limit order, for a pair trade, you can't set your limit at 110 because there's no such concept on DYDX or Hyperliquid or Binance, right? There's only a limit order on the individual legs that you're long or short. And so on pair, what we've also done is built the ability for you to set a take profit and stop loss on the pair. And so from a risk management perspective, you've got not only the operational benefits of longing and shorting in one click, we calculate your net funding situation in real time for you. You get the P&L of that position and you're viewing it as one position at any given time. And then the final piece is the take profit and stop loss, which we're really proud of.
Vertex is a lightning-fast order book DEX offering spot, perpetuals, and money markets with unified cross-margin and a vertically integrated product suite. With Vertex Edge, users can tap into the power of shared cross-chain order book liquidity across Arbitrum, Blast, and Mantle, while earning trading rewards in VRTX, ARB, and MNT. Traders can access over 50 spot and perpetual markets alongside the GMCI 30 and meme indices, with low-fee trading and capital efficiency, all while preserving self-custody and on-chain settlement. Learn more at vertexprotocol.com. Yeah, no, it's a great concept, and again, kind of like my overall thesis, for crypto and the next step is like any of these apps that are building to improve the fractured UX, and the fractured liquidity problem that we've kind of seen. Are protocols that are going to win, in the medium to long term, in my opinion. So that's kind of exactly like what you guys are doing, right? Is like you're kind of fixing this big UX problem, unlocking pair trading on chain. And speak about it a little bit. So pair protocol is built on top of other venues, correct? So maybe speak about some of the synergies there, and what trading venues are you guys currently built on?
Yeah, for sure. So the cold start problem for any centralized exchange or decentralized exchange is where do you get your liquidity from? So in the case of something like Hyperliquid, they've spun up HLP. They're very aware of what market making is, and they've managed to bootstrap that and get people to deposit into that vault. For other platforms like a Binance or a Vertex or whatever, they've got an order book and you have to go and cut deals with market makers to provide liquidity. And then for a fully on-chain liquidity pool solution, you've got something like GMX. And again, the job becomes getting people to deposit into those pools. And so the cold start problem for any decentralized exchange, including ourselves at Pear, is to find that liquidity. And one of the big problems of that is liquidity is fragmented. So you've got market makers on centralized exchanges, you've got some liquidity on other exchanges, you've got just liquidity fragmented across all these different venues. And so our thinking was, okay, rather than be in this game of attracting LPs and attracting market makers, what we'll do instead is we'll rent our liquidity. And so we'll become liquidity agnostic, meaning right now we integrate with multiple different liquidity venues. So our first integration was with GMX, our second was with Vertex. We then integrated with SYM and its market maker network, so its solver network, which has a handful of market makers underneath it. And these are not mutually exclusive, we're integrating with Hyperliquid next. So ultimately, the way that we source our liquidity is we build on top of those platforms, and then we take a small fee when you execute.
Gotcha. Yeah, so it becomes very synergistic for Pear to be building on top of you, I would imagine. And then also too, I would imagine like, with this functionality and kind of with the pair trading, like it probably creates some very interesting strategies to take advantage of various like funding rate arbitrages, across all of these platforms. Is that something that you guys see a lot of traders taking advantage of on pair, or I guess speak a little bit about maybe that opportunity?
Yeah, for sure. So it's not so much funding rate arbitrage. It's more finding positive net funding situations. And I'll give you an example of this, right? When you're pair trading, typically, let's say the market is somewhat bullish, you're paying funding to be long an asset, right? And you receive it if you're short. And so we have this concept in pair trading of net funding. So let's take a classic example of being long Bitcoin and short ETH, right? Because the market wants to be long both assets, you have to pay funding to be long Bitcoin, and you receive funding to be short ETH. And so that net situation might mean, depending on market dynamics, that you get paid to be in that trade. And so what some pair traders do is they come to the markets page on pair.garden, and they screen for trading opportunities where you get paid to be in that trade. At the same time, those trades sometimes perform very well, because what you're doing is you're longing an asset which is being heavily shorted and getting paid for it, and you're shorting an asset which is being heavily longed and you're getting paid for it. And so traditional funding rate arbitrage, where you long on one exchange and short on the other and make the difference, I think that's more within the realms of single asset trading, right. Single direction trading. But for pair trading, this concept of, I wouldn't say arbing funding rates, but like using funding rates to find opportunities has been something that we've seen a lot of volume in recently.
Yeah, it is. Yeah, you make a good point there. Yeah, like being able to take advantage of like both sides, of the funding rate, depending on like what pair you're looking at is attractive. So obviously with the markets lately, there's been a ton of volatility. Various narratives have, taken off and then withered, taken off and then withered again. One of the things that we saw that was very prevalent and very hot recently has been, AI agents, AI and crypto convergence, basically. Talk about that a little bit, and does it have any crossover with pair trading? I could imagine, obviously pair trading is complex. You guys are simplifying that, but even taking it a step further for users that maybe want to get exposure to pair trading, but maybe they can do so through AI potentially. But maybe talk about that a little bit, and are there opportunities for pair when it comes to AI?
Happily, and this is something we've spent a lot of time on recently. So there's a concept of generalized agents. Like I'd say something like AIXBT is a generalized agent. It's scraping Twitter for sentiment data, and it is potentially doing some charting analysis, right? And it's very general across the whole crypto market. And a specialized agent would just focus on a particular piece of the market. And so our agent that we're building is called Agent Pair, and it does it just for pair trading on certain pairs. Now, let's take the AI side away. As a human myself today, to find a pair trading opportunity, I'm using a combination of statistical, technical, and fundamental analysis. So let's take an example like Bitcoin SUI, right? I could build a fundamental picture why I want to be long Bitcoin and short SUI. That includes things like token unlocks. It includes things like the macro climate for alts. It includes things like mindshare and Twitter sentiment, etc. I could build a technical story for why I want to be long Bitcoin SUI based on the charts, based on open interest, based on funding rates, based on liquidations, based on how the market's positioned. And then I could take a more statistical approach, which gets into the world of like quant finance, but looking at correlations, co-integration, looking at mean reversion of these assets and these kind of things, right? Now, clearly for a human being to analyze those things on a 24/7 basis is going to be tough. And it limits how many people can get into pair trading. And so what Agent Pair is doing is it's constantly scanning through APIs, all those different data sources, whether it's CoinGlass, whether it's TradingView, whether it's a statistical arbitrage API that we've integrated with, whether it's Twitter or other venues. There's like 7 or 8 APIs. And it has learned that this means A in context A and this means B in context B, right? And it is starting to build like a library of pair trades with performance, what worked well, what didn't work so well, and why. And so agent pair is going to be, when it's released in the coming kind of weeks and months, a specialized agent just for pair trading. And it will not only generate pair trading ideas, but you can actually have a conversation with it as well. So let's say you're thinking of going long Bitcoin and short ETH. It can combine a statistical, technical, and fundamental picture for you, and tell you what kind of conviction it has in that trade idea.
Interesting. And I'm assuming it'll take some kind of a performance fee, on the trade as well as a source of revenue for Pair Protocol.
Yeah, so right now it's conversational, so it gives you ideas and you can talk to it. But the extension is going to have it to be able to execute trades autonomously. And then once it's executing trades, what's the best way to implement this on Pair, right? And one of the things we're thinking, probably like the primary way to monetize this, is to have just a vault where users deposit into that vault, and then the vault automatically executes the trade. So we don't need to take a separate fee per se, because the volume is getting done on Pair, so it's in our interest to do so.
Right. Yeah, it's there's been a lot of obviously like AI agents and like these crazy use cases that seem like, so far out in the distance, but like everything else, DeFi kind of started, with trading, right? That's like kind of like the fundamental use case of DeFi at the beginning. And so I see no reason why like AI should not also start, in similar origins. Because, again, you look at some of these use cases for AI and you're just like, I can't see a business model for that long term. Do I really need an AI agent to, I don't know, do my taxes for me? I mean, yes, that sounds great, but like, the amount of like data training, and analysis that would go into that, seems like that might take a couple years, to actually accomplish versus, a couple weeks, like some of these agents claim to have. Yeah, so it's really interesting to me, like things like this. We were talking before, but like the things like what Symphony's doing, kind of like with this cross chain, trade executing AI agent, things that can simplify the UX problem, within AI, are really really interesting, and I think those are going to be the ones that are going to be highly utilized and the ones that are going to do really well. In addition to that, so. It's great to hear, that that's coming to Pair. How long do you guys think until that's released? I know you said maybe weeks or months. Is that something you guys are expecting first half of the year here still, or is that later on?
Yeah, so a couple of people have already played with it. So it's live and operational within our Discord already. And so for us, it's just a case of, like, we don't want to release something because of hype, right? And like, there's no need for this thing to have a separate token and all of this. So we're just focused on making it as good as possible right now. And I think the view here is, whilst the market is like kind of in this choppy whatever mode, it's a great time for it to learn and get better and get that feedback from its users and gather more data, etc. So, like, in short, I could release it tomorrow. But we wanted to optimize it, and so like the reason why it's open-ended between weeks and months is like, to what extent do we want to get the vault ready and all of that before we launch it? Right.
So I know you guys are talking about, obviously integrating with Hyperliquid here coming up soon. Do you think that is the scaling path moving forward for Pair, is integrating as many of these trading venues as possible? To be able to take advantage of their pairs, of their liquidity? Or do you think there's a certain inflection point where it kind of becomes, less ideal, I guess? Because if you have something like Hyperliquid, for example, they've got, the most pairs, they've got, tons of mind share, tons of volume. Like, do you think that negates the necessity to continue to expand venues if you find, a venue like that? That you can take advantage of, or like, what are your thoughts on like the further expansion of Pair?
Yeah, I mean, ultimately we go wherever our users want to trade. So right now, a lot of people want to trade and route their orders through Hyperliquid. And so by integrating with Hyperliquid, what we do is we appeal to Hyperliquid users because they still get to route their volume through there. They'll still qualify for any future points for their wallet by doing their pair trading on Pair through the Hyperliquid engine. And we'll still maintain all the other engines, right? So our intent-based engine gives us a lot of freedom and flexibility to add new assets very quickly, including real-world assets. We started with GMX and Vertex, and we're very happy to keep supporting those platforms since, especially with GMX, they have this like loyal user base that wants to use and route its orders through there. And if something else comes up tomorrow and it's like the next big DEX, then we can integrate with that, because for us, we are very much just like a front-end platform building on top of all these other liquidity venues. And so for us, the more liquidity there is, the better. Like if somebody says to me tomorrow, oh, you need to integrate with XYZ new DEX, there's like theoretically no reason why we wouldn't do that. I think the big unlock for Pair becomes like when you integrate with a centralized exchange like Bybit or Binance, because a lot of these liquid token funds and some of these bigger clients, they have funds parked on these assets, on these exchanges, sorry. And they'll only pair trade through Pair if we kind of have an API that lets them route their trades through their existing Binance account or whatever. So that is an interesting angle to look at too.
Yeah, for sure. That would probably be the ultimate unlock, I would imagine, for you guys. So let me ask you this. This just kind of occurred to me. But if I'm a user, right, and you mentioned like the GMX example, if I'm a GMX maxi, I come onto Pair, I see a certain pair trade I want to execute. I can actually choose where that trade gets routed through. So I could choose GMX versus Hyperliquid, for example, or vice versa. Is that up to the user to choose, or just like the system just optimized for the best execution path?
Yeah. So right now we don't aggregate in the sense that we don't route it through where we see it's best to place it. So it is user selected, and I think it will remain that way because it's tough to do a scenario where like you're long on GMX and short on Hyperliquid. Because you can't cross margin between the two, and cross margining is a really necessity. Is a real necessity when it comes to pair trading, because you want your losses on one leg to be offset by your gains on the other. So for us, to ensure that the orders get through to the same underlying liquidity venue, and therefore subject to cross margin, it makes sense that the user just selects where they want to do that.
Gotcha. No, it makes sense. What's the traction been like for you guys so far, Huff? I know you launched a while ago. Things have seemed to have been going well, pretty well for Pear Protocol. But what's the traction been like?
Yeah, things have been very good since we launched soft launched in May of last year and fully rolled out everything in kind of August of last year. So if I take that as like a 8 to 9 month journey. More recently, we just hit 500 million of trading volume, about 4,000 plus unique wallets. On any given day, there's like between 50 and 100 active users. And we have been raking in fees, right? So over like 500K worth of fees. And so for like a phase one rollout of this platform, I think we've done really well, especially because a lot of what Pair has had to do is educate people on pair trading. Yeah. And so there was like a handful of people that knew what pair trading were, and as soon as we launched, they were like, great, I want to be long ETH BTC, or I want to be long like Lido versus Jito, or long Sol versus ETH, right? And those users came and traded on Pair. The heavy lifting has been building the articles, the videos. Soon I have a Udemy course coming. On Twitter, we've been very kind of active with educating people, and in real life efforts to like speaker engagements and things like that. So the heavy lifting has been in educating people about pair trading, and I think this market scenario, we're very well positioned to like 2-3x our volume over the coming weeks, because the pendulum swung back to people like not just blindly longing memes on their Phantom wallet, but really scratching their head as to how to become a better trader.
Yeah, that's a good point. These kind of choppy markets where you can't just throw a bet in and then it goes up automatically, or probably prime, for something like Pear. And yeah, just to say, I guess that's an aside, man. Like I think you guys do a really really great job of educating. I've seen some of the stuff you guys have put out. Obviously, we've put out some content to kind of help in the education department as well. But I'm really bullish on protocols that take that seriously, because at the end of the day, I think that's the best acquisition strategy too. If you want to keep a user long term, then you've got to make sure that they understand your protocol deeply, and understand the risks and also the ways that they can take advantage of it. So I think, tap on the shoulder to you and your team. You guys have done an excellent job of that. So I guess let's talk about the Pear Protocol token a little bit. You mentioned lots of fees that you guys kind of accumulated over the last couple months. What's the utility for Pear, and where does Pear kind of sit in the ecosystem?
Yeah, for sure. So I'll start by saying most protocols don't need a token. Most crypto projects don't need a token.
Yeah.
And so if you're going to have a token, it has to have some value proposition, above and beyond just governance. And so for us, Pear is a revenue sharing token. So 80% of all our revenue goes to people that buy and stake the Pear token. And so that's the first utility of it. The second utility is if you do buy and stake Pear, depending on how much staked Pear you have, you get a discount of between 10 and 50% on your trading fees. So not only do you own some of the network or some of Pear, you receive the revenues that other traders are generating, and if you're trading on Pear, then you can achieve some pretty meaningful discounts. And then the final piece is, as Pear grows, the token will be part of that kind of governance framework as well, especially like we said about integrating with centralized exchanges, about taking a bit more of an AI path. Like wherever this business goes, token holders will have some kind of say in the future of Pear. So that's the threefold kind of use case of Pear. And so far, our kind of thinking has really played out, which is people that come to Pear, they get locked into the ecosystem. So they come maybe to just educate themselves a bit about Pear trading first. They read some of the articles. We had a series of cartoon video, educational videos that we did. They watch some of the videos, and then they decide, okay, I'm going to do some Pear trades. They do some Pear trades, and they hopefully make some P&L. They share their cards, and then they go over to the staking page and they buy some Pear, stake it, and so they become an investor and a trader. And what we've seen is, because we've analyzed a little bit of the life cycle of some of our journeys, of our users, is after they've staked, they start trading a bit more as well. So they really buy into this idea that you can get the fees from other traders as well at the same time.
Yeah, couldn't agree more on the thesis there of not every protocol needs a token is completely true. I'm tired of seeing governance tokens, in general. Generally bearish on most DAOs, actually. Just because normally, token holders are not incentive aligned with LPs, right? Or they're not incentive aligned with traders, obviously. So usually you have these two forces that are kind of working against each other. And it just creates, chaos and inefficiency at the end of the day when it comes to what the DAO is actually supposed to be doing. So it's good to think good to see that you guys have thought about that as well. One thing I actually wanted to double click on earlier that you mentioned, but I didn't get a chance to at the time, was I know you guys integrated with SYMMIO. Talk about SYMMIO a little bit. I've seen SYMMIO pop up a lot. There's a lot of front ends that support SYMMIO. In the back end. But what does SYMMIO unlock, you think, for Pear Protocol, and what advantages do they kind of add to what you're doing?
Yeah, for sure. So Sims, on the surface, what people think SYMMIO is just a way for people to build front-end trading platforms on top of, right? And then tap into their solver network. But actually, if you speak to Lafa and his vision, he wants to build an OTC marketplace for any asset on-chain. And what really got me interested in SYMMIO was this grand vision that in traditional finance, when when a hedge fund wants to do a trade with a bank, when a pension fund wants to do a trade with a bank, when any like major institution wants to trade with one another, they use OTC lines, right? And those are typically done via something called an ISDA CSA, and there's a whole bunch of like legal, credit, and risk departments involved to ensure that the transactions done between those two parties are in a very kind of fundamentally sound manner. So no one's going to lose money, and there's legal recourse and things. And so what SYMMIO brings is they've got this technology where we in the middle as Pear can find users for something like pair trading that can then connect with SYMMIO's solver network, and the solvers, the market makers, can fill those orders. And it's very much parallel with like how a hedge fund might come to a bank and say, hey, I want to go long Apple and short Meta, right? The bank will say, okay, I can do this for you, but sign all these papers and put all this collateral down and all the rest of it. And so the SYMMIO platform is probably the most flexible in terms of where we can go with this. So I'll just give you an example, right? If they add gold tomorrow to the solver network as an asset class, you can go long Bitcoin and short gold, right? The inverse Peter Schiff trade. And like the ability to add all these little bells and whistles, like for example, with the solver network, the solver could rebalance your trade for you if you just give them the rights to say, okay, when the beta of these two assets does this, can you please just rebalance this trade for me? And if we find a solver that can do that, which any of these like more quantitative based algorithmic based market makers can do, then again we've empowered users on Pear to become much more like how a hedge fund would trade, and it's only made possible because of SYMMIO. And so the difference between SYMMIO and let's say like integrating with a Hyperliquid or integrating with a Vertex is Pear just becomes a pass-through, and we provide these like unique benefits that I already mentioned. But with SYMMIO, it's really the beginning of where we can go with regards to replicating how traditional finance works. And so it's really early days, but like I'm a big believer that pair trading is just the start in terms of building more complex trading strategies on chain. It's just that you need to get the execution piece and the solvers and the market makers who can help facilitate that lined up. And so I think we're still early days, but the future state of SYMMIO and Pear together, it can have all sorts of like weird and wonderful things to it.
Alchemix Finance empowers you to spend and save at the same time with a self-repaying, interest-free, non-liquidatable loan. Deposit your assets and access your future yield today. Available on Mainnet, Arbitrum, and Optimism. Head to alchemix.fi to get started. Yeah, absolutely. I mean, I'm a big fan of SYMMIO because I think, like, you know, in terms of thinking about the future, right? Like, there's been a lot of talk. I think like somebody tokenized like Coinbase stock the other day and put it on Base, and you know that was a big thing, which is awesome, right? Shout out to those guys, but like being able to onboard those kinds of like equities and tokenize them and bring them into like a pair trading venue, like through something like SYMMIO, is like the next step, you know, of an unlock, I think. You know, just taking Coinbase, for example, right? Being able to pair trade coin against, I don't know, like Nvidia, you know, or something. Maybe you're bullish, you know, coin's earnings that quarter, you know, and you think they're gonna outperform Nvidia or whatever it may be, right? Like that future is what I'm really looking forward to be able to do that thing, do those things on chain. So it's gonna be really cool.
100%. And like the introduction of any kind of real world asset, whether it's stocks or like property or gold or whatever,
Yep.
you just need solvers that are going to be on the other end of that. And what solvers are not going to do necessarily is like put these assets on an order book. It's going to be a very bespoke trade for user X, and the challenge becomes how can a front end like Pear work with SYMMIO and with the market makers and provide really like revolutionary on-chain tools to unlock like on-chain finance for people, to empower people. And so what I like about SYMMIO is one of the last few projects that really has this like revolutionary zeal to it. And if you ever meet Laugh, he's like completely crazy, but completely absorbed by this concept as well. And I love that. I love like the remaining people in this space who really want to push the needle.
Yeah, no, you're absolutely right. Yeah, I've talked to Lafa a few times, and Yeah, to say that I was not the smartest person in that room would be an understatement. So, shout out to you, Lafa, wherever you're at right now. Um, no, good. So I think it's a good place to wrap up. I think we covered a lot. Any closing thoughts as in terms of like, do you want to say anything to the users or to the listeners about anything coming up for Pear that's got you excited? And we talked about a lot, but anything specifically that comes to mind?
Yes, I think we've touched upon the main things, which are the Hyperliquid integration, which is coming at the end of April, early May, to the public. Most likely, those are the provisional dates. We've talked about the AI agent, which we will probably release in parallel with the Hyperliquid launch. I teased it a little bit, but we're building a Udemy course so you can work through in a structured way through pair trading. Already today, if you want to learn more, then pair.garden /education. Pair.garden's the site anyway, and you'll find the education tab. Has a myriad of articles and videos you can get into and start learning about it. And the final piece I'll say is pair trading is probably one of the last remaining ways to consistently make profit in crypto, because what's happened, unfortunately, over the past few years, and especially this cycle, is crypto's really become like a decentralized casino. And in that casino, it's almost better to go to a normal casino, because at least in a normal casino, you know your odds when you play blackjack and roulette and things. Here, like, you're playing a rigged game, right? So a lot of insider activity, a lot of like nefarious activities are taking place in this space. Whereas pair trading is just about narratives, and narratives aren't going to go anywhere, right? And so I really encourage people to start looking at simple narratives, which are like evergreen, like being long Bitcoin and short ETH, or long Bitcoin and short Sol, or whatever, and just see if you make money with it, and see if you like vibe with what's going on there, and then maybe branch out into the next narrative. And there's a way in which you could have like made money just being long memes this past 12 months, right? You could have just been long something like Pepe and short Whiff or something. You still would have made money. So it's just a case of like dialing into these narratives and trying new things.
Absolutely. I guess just to close things on our end too. So obviously check out the show notes. We'll have links to all of the places you can find Pear and definitely the educational content. If you check out aliaresearch.io, actually, we've got a deep dive analysis of Pear Protocol and how everything works. And then we've also got a perspective report, which will actually get into like why pair trading is important, how you can take advantage of it, and kind of like the paradigm and the narrative of pair trading as a whole. So, that being said, Huff, really appreciate your time. It's been awesome talking with you. And for everybody listening, we will see you on the next episode of Proof of Vision. Thank you.
Thank you for having us, Kirk.
Absolutely.